Hello everyone and welcome back to my channel. My name is Sterling, or you can call me Sterling Trades. So this is video number 2, and in today's video I want to just explain how I trade, as well as take you through maybe what I'm looking at for the week. Quick reminder, if this is your first time here on this channel, my name is Sterling. I'm using this channel as a way to document my journey towards consistently. I have been profitable but not consistently, so I'm using this platform to document that journey and shows you what it looks like. So today I'll be showing you how I trade, how I build my market bias for the week and for the day or for the session, and I'll show you what I'm looking out for the week. Actually, for today, later today we have CPI, and for the rest of the week. Again, just a quick reminder, this is not a signal service. I'm not sharing any financial advice or a magic strategy. I am simply documenting my journey and showing you my ideas and my thoughts. If I'm wrong, I'm wrong. That's the nature of the market. So let's start with my trading philosophy. So first and foremost, I am a trend continuation trader. That means I look at where the trend is heading, and I trade the trend continuation. I don't try to catch tops. I don't try to catch bottoms. I did in the past, and catching falling knives is a terrible, terrible idea. So basically, I focus on market structure. Uh, Basic things. Look at what the market is showing me. Is it in an uptrend? Is it in a downtrend? Is it forming lower lows, lower highs? And I go off of market structure. Again, I have to look at price action for my entries. Simplest, I have found that keeping it simple is the best option for me. Yeah, that's my trading style. That's my preference. So I have to look at higher time frame first. As you can see, I often start my analysis from the monthly, but that is I only look at the monthly when I'm doing my weekly pre-market analysis, and then I go down to the weekly. Typically, mostly I start down at the weekly and then go down daily, and mostly use H4 for my entries. Minute 15 is here for experimenting. I was looking at something, but I've come to find that minute 15 really is not my thing. Lower time frames are not my thing. So my typical entry is on the H4. Of course, I will take you through some of the trades that I've taken in the past. So, besides looking at market structure and price action, not often, fundamentals heavily influence what I trade or what I'm looking at. So, for example, I have to look at the economic backdrop for any currency pair that I'm trading. As you can see, I mostly trade USD pairs and a few. Actually, there is only one JPY pair that is not correlated with the USD. For me, I've found it easier to look at the economic data from these economies. This is why they are the only currency pairs I trade, as well as gold, silver, oil, um, the stock indices, that is US 30, US 100, US 500, and the German 30, and Bitcoin and Ethereum. And these are bonds or bond yields. So I have to look at fundamentals to first determine the broader economic environment. So again, I have to look at the economic backdrop. What are the interest rates or projected interest rates in the country? Yeah, I also have to look at inflation trends. So, for example, let me show you trading economics right here. As you can see, I was recently looking at Japan and US just to see the economic outlook in the two countries, as I was doing my analysis of the two currency pairs. I have to look at growth expectations as well as market sentiment, consumer strength, I also have to look at the job markets, and all these data points to one thing. All these data points to one thing: interest rates. Interest rates, interest rates, interest rates. For me, I've found that most of these other data they point to the interest rate. What is the central bank or the Fed likely to do in the future? And to add on to that, I also look at the bond markets. Now, why do I look at the bond markets? Bond markets price interest rate expectations forward. So you find that yields often move ahead of, official decisions, official rate decisions. And for me, I found that they can give you an earlier signal about where the exchange rate is likely to go. So, for example, uh, let's look at the current market right now, for example, right? If you look at the 2-year bond yields, they have been they have been moving upwards, especially since the beginning of the Iran war. You can see bond yields have been moving forward for the last couple of, I think, 2 days. They pulled back a bit, expected to go higher. So I also look at the 10-year yields, but I focus mostly on 2-year yields. I've found that the 2 years, the 2-year yield is, most, how do I put it? So I've found that the 2-year yields is more highly sensitive to expectations about, interest rate policies. Is the Fed leaning more hawkish or more dovish? The 2-year yields tend to reflect that more, especially when it comes to currencies, more than the 10, 20, or 30 30-year yields. So for me, I have to look at the 2-year yield to give me a bias, especially for the near future, for the week, or yeah, mostly for the week, or for the coming, for the short term. Yeah, and is it a must for you to understand fundamentals for you to be able to trade? I don't think it's a must. For me, I've just found, everyone has to choose their own trading style, or yeah, their own trading style and the information they want to look at as they decide whether to, execute a trade or not. And for me, having made a huge number of mistakes, I found that looking at fundamentals is important for me to be able to get, a future outlook, or a possible future outlook, of what the market could look like in the future. It's not a magic, or a magic thing that will tell me this will definitely happen. No, it's something that's just giving me a bias. That's just giving me, this is likely to happen in the near future, and that enables me to, position myself in the markets, or develop my bias for. So let me give you an example of how I go about my analysis. I think the best example will be using the dollar index right now. So again, I start from the higher time frame. Let me get rid of this. Sorry, let me get rid of that as well. So chart is a little, cleaner. Typically, again, I rarely start from the monthly, but again, I look at the monthly and establish, the trend is heading upwards. It's an uptrend. Then I go down to the weekly, gives me a clearer picture of what's happening, in the short term. You can see that, for example, this has been ranging, I believe, since May last year or so. It has been ranging for about a year now. So I know it's stuck in a range on the weekly, but of course, if you go down to the lower time frames, you could get possible entries. Now, for example, I'll show you. I had an entry here. It just bounced off around 95, $96, and it's moving upwards. It has been moving upwards since it hit the lows in January this year. it is on a clear uptrend, as you can see. Higher high, higher low. Didn't make to break that high, but it did break that higher, this higher high, and it created a new high. So it is on a clear uptrend. And then I will wait for a pullback. So for me, let me get rid of this first. This was on a higher time frame. So after it broke above these highs, it was on a clear uptrend, higher high, higher low. And then it formed a higher high, higher low. It was unable to form another higher high. So for me, I typically want to see the market do a complex pullback, right? I don't like, so market pushed up to around the 97.5.6 level, came back down, retesting a previous area of support at 90, around $96, and then pushed back up to that previous level, consolidated a bit for a while, and then it broke to the upside. Now, I've identified the market is, in a clear uptrend like that. What is my entry, my preferred entry criteria? Again, from my back testing, I've found that markets that have a complex pullback, a multi-legged pullback are my best performing trades. So, for example, as you can see here, it's not V it's not a V pullback. So, for example, let me explain what I mean by a V pullback. A V pullback is where the market is pushing a high, higher low, and it just pulls back once and the market rallies. That is, a V forms a V shape. That is what I'm referring to as a V pullback. From my back testing, I found that trades in which I perform best are ones where the market has pushed, for example, formed a higher high, higher low, and then it forms a multi-legged pullback. So the market is unable to, after it forms a new high pullback, it's unable to form a new higher high. Either it forms, what would typically be seen as a double top, or is unable to form a higher high at all, and then pushes back maybe below that initial low, and then typically I found that my best target will be at that level of the higher high. So typically this usually forms a flag pattern, and I've come to find that this is the best entry for me. So I usually typically would enter somewhere around here, target these highs, stops, one or two ATRs below this low here, depending on the candlestick that from around that area. I've come to find that from my back testing, that is, yeah, from my backtesting data, I've come to find that these multi-legged pullbacks are the best entry criteria for me. And that is typically what I look at. If you see my charts, you'll see flag patterns marked all over, right? And I don't usually hold on to my bias. If the market turns around, as you can see, market came here, broke structure, and it was now in a downtrend, and I immediately changed my bias, and I'm looking for sales, and I got this beautiful sell trade over here. Again, after markets, after things changed, I believe this was as a result of the war. I started pushing back up again, consolidation. So I'm waiting to see if the markets will pull back, maybe to retest this consolidation area, and then I will get probably another entry. If it does not pan out, then well and good, right? So for example, let me show you another trade I had here. This is one that I had on Bitcoin. So Bitcoin was tumbling after it hits the highs of 126k. It started tumbling and broke structure around this level. Jesus Christ. structure around this level, and we're officially in a downtrend, forming lower lows, lower highs, lower lows, lower highs. Again, as you can see, complex pullback. It's not a V pullback like the one here. This is a bit of a complex pullback, and these are typically, my best performing trades. So I didn't take an entry here. I think I didn't, it didn't quite meet my entry criteria there, but as you can see here, I had an entry. So market broke below this support level, support turned resistance, gave me my flag pattern, and I was able to get an entry around here, and it rallied all the way to this previous lower low, yeah, rallied all the way to that lower low. So there are typically other things that look like the Fibonacci retracement levels. As you can see, this one pulled back to the golden level between the 618 and the 50%. Sometimes, Jesus, so sometimes it depends on what the markets look like, right? So sometimes market can pull back to the golden ratio or the golden level, sometimes only up to the 382, sometimes all the way up to the 786. Typically, when the market pulls beyond the 886, around 8, anywhere beyond 786, I typically don't take an entry. So my sweet spot is between the 50% and the 618%. So yeah, that's basically it. So mostly I take my entries on the 4 hour. I look at the candlesticks that are formed around that area, and those are the ones that is what determines if I take an entry. So if you look at this, for example, here we had this resistance zone that came and turned to support, but once it broke, we broke below that support. I think my entry was, yeah, once we broke below this support right around here, that is where I took my entry. And sometimes when I'm in these swing trades that will work out on the higher time frames. For example, as you can see, this analysis was on the daily. Sometimes I will go down to the hourly, for example, and sometimes I will see other entry opportunities. So as you can see, for example, I was holding this sell on BTC on that from that daily time frame, and from the lower time frame, the hourly, you see I still had some other entries still following the same criteria, but now on the lower time frame, not on the higher time frame. Again, market breaks below this support, turns resistance, gives me sort of a complex pullback. I get an entry, I get the previous low here. Again, same thing around here. But now for this one, I decided to extend my targets down below to this support level here. Why? Again, fundamentals. Fundamentals are what influences decisions such as this. Um, yeah, I didn't have an entry here. As you can see, this is not as clean as other as other flags that I've shown you that I usually trade. Uh, Yeah, when it's not as clean, I prefer to not trade it at all, rather than risk taking a setup that I will not be happy with in the end. So when the setup is not as clean, I usually just ignore it. Although it may look nice overall. But yeah, so for example, on this BTC trade, based on fundamentals, I'm still holding it. I've traded significantly. I believe at this moment my stop loss is above these highs. Of course, I've taken off some of the profits from this trade. It's a nice rally. My stop loss is currently right here, right above this previous high, and I have taken another short-term position on this. Again, you can see a flag pattern giving me another entry. Yeah, a flag pattern here gave me another entry. I'm still holding that. So I have two, I believe two running positions. This one and the one I held from all the way from those highs, from those higher time frame highs. Yeah. So that is basically just what I usually look at. So I usually start my analysis by looking at what news do we have for the week. Like today at 3:30 p.m. Kenyan time, we are looking at CPI with a forecast of 4.2%. So for me, that means that I am holding my bullish bias on the dollar index. I'm anticipating that during the London session, so as I'm recording this, it's 8 in the morning. So I'm anticipating during the London session, you might see another leg down here from for for the dollar index, which would maybe give me an entry down here that I could capitalize on in the New York session. Now, yeah, so I don't know. My trading system is that simple. I look at the news, I look at the numbers, and then I look at the market structure that will give me my entry. So do I necessarily look at the session in which I'm entering a trade? Typically, I don't like to be entering a trade during the London session. Again, from my data, London session butchers me, man. London session, I bleed a lot during London. That's because typically, sometimes, or more often, you'll find that during London is when we have pullbacks. So during Asia, markets rally. During London, they either pull back or consolidate, and then you see a continuation during the New York session. This is not always the case, but yeah, from my back testing data, I prefer not to execute trades during London. So I either execute during New York or during Asia. During London, I usually know either markets are pulling back, so I'm usually careful on trailing stops to avoid being taken out during London and then going to New York and things continue to move in my direction, and you find that you're out. So yeah, I mostly execute during Asia and during New York session. Again, just an example of the flag patterns and how they usually pan out for me. As you can see, this is oil from the past. These are previous trades from oil when it was tumbling nicely, and then I had a quite a nice, had a quite a nice winning streak on oil around here. But all good things come to an end eventually around here. So I remember I didn't execute this, although it was looking nice. Gave me pin bars around here. So typically after this pin bar, I would have had my entry around here on this next candle and targeting around there. But now it's not just about where price is. I also have to look at where price is likely to go to. And seeing that it had already bounced off from this support zone at around $55, I did not execute. Although it looked like a nice clean setup, I did not execute that. And eventually you see boiled up nicely, broke structure, and from there the war started and boom, oil shot up like crazy. So again, it might look like a nice clean setup, but again, it does not meet a lot of my criteria. And number two, with the war going on, oil prices are very, 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 very choppy right now. So, or very erratic rather. So I prefer not to execute any trades on oil. So what am I looking at today specifically? Let me, or for the rest of the week and maybe in the coming weeks. So based on the So what am I looking at for the rest of for today specifically and for the rest of the week? So uh, we have already established that I'm bullish on the dollar. That means I'm bearish on things like GU. Yeah, actually, I do have a running trade on GU. Yeah, I do have a running trade on GU. I executed here. I remember I executed on the based on the 1 hour. Again, as you can see, price broke below this support level, pulled all the way back in a complex pullback, gave me a nice clean looking, flag pattern, got a, spinning top or a pin bar. And the next candle was a nice bearish, strong bearish candle. Then I executed another candle after that. I believe I used a 280R, no, yeah, a 180R. It was a 180R stop loss on this to give me a risk reward of 5 is to 1. So I am bullish. Sorry, I got distracted. I am bullish on the dollar. For London session, we could see it pull back. Why am I bullish on the dollar? So based on the data we have been having, so we see the economic growth bias, or based on the fundamental data, right? So the economic growth bias, we have bullish outlook, as you will see on both the manufacturing and service PMI and on the retail sales. Uh, Looks like the US economy is doing well, which is often good for the dollar. On the inflation, today again we have CPI. Previous was at 3.8. Today we are possibly looking at inflation rising to 4.2%. And based on what we have been seeing on oil prices recently, as a result of the war, we could see the price of goods and services having gone up in recent times. So the CPI year on year could come above the point, above the previous 3.8. So we could see it if it comes above the previous 3.8. And I'm not sure if it will get to the forecast of 4.2%, but if it hits anything above the 3.8%, then if it hits anything above 3.8%, then that means the most probably the Fed will have to lean more hawkish, to deal with the problem of inflation. And it's sticky inflation because oil prices go higher. That means the price of everything goes higher, and that's something that's tricky to deal with. But anyway, yeah. So based on all previous data, and then probably the outlook of the CPI, and then later in the week we have PPI again. So in the scenario where we see CPI come above 3.8, then I will maintain my bullish bias on the dollar index. If it comes anywhere around 3.8 to 3.6, then we could probably see the dollar index being caught in another consolidation. Probably being caught in another consolidation. Again, anyone who tells you they are sure where the market will be headed, I believe that's not true. And if we see, this inflation number come way below the expectation, then probably we could see a reversal, maybe come break down below this previous consolidation zone, and maybe we get in a downtrend. Who knows where the market will be headed? I don't know. Based on the data, most likely scenario, based on my analysis, is a bullish continuation on the dollar index. And for me, that is not just for today. That would, hold my that bias until the data, until the fundamental data or the macros show me otherwise. So yeah, I think I'll end it there today. So current market environment is a bit tricky, a bit, not necessarily tricky right now. The markets have started trending again. I do well when the market is trending. I think from the scenarios or from the examples I've shown you, when the market is trending, I tend to do well again. That's simply because I'm a trend continuation trader. Yeah, I hope the markets continue to trend the way they have been. I hope I do get entries because not always that the trading ideas I have will automatically turn into executions. Again, I think I showed you. Did I show you that an example? I believe on the Dow Jones that I had here. Yeah, I think it was on the Dow Jones. So again, another beautiful flag pattern. However, market has just bounced off from this support zone. Market has just bounced off from this support zone. And for me, that I have to ask myself, it's not just about where price is at; it's also where price is likely to be headed to. So for me to target, from here again, and as you can see from the 1 hour, with this strong bearish candle, that would mean my entry will probably be around here. And as you can see, this candle had already pushed again back all the way to this support zone only to be rejected. So that would mean my entry around here, my stop loss based maybe on 180R will be somewhere around here, and take profit around here. That just doesn't make sense for me. Again, I have to work with a positive expectancy, or positive risk reward ratio, and this just will not work for me. So this is again a setup that looks as if it's clean, but a setup that I have to ignore. So not all trading ideas eventually turn into executions. So I hope the markets go well for me. I hope the markets continue. I hope the market continue to trend, and yeah, if they do, and I continue to follow my rules, then my journey to profitable or consistent profitability will be much easier. So again, I hope to see you on the next video. Yeah, I think after the CPI, I might record another video to show you the outcome. I think I'll work on editing this video right now before the CPI, before the CPI is released, and then maybe get it out to you guys, and then after that, see if I can work on a post CPI video. If not, then maybe I'll just attach it at the end of this video. So yeah, thank you guys a lot for being here. Make sure to like, subscribe, walk this journey of consistency with me. Peace out.